Hello, I'm John Conrad. Today we're going to discuss a lot of the mistakes first-time landlords make. We'll start off with taxes. I know this is no one's favorite subject, but it's so important to real estate that you really can't skip over it. Never buy a property because of the tax benefits, but once you own a property, you have to take full advantage or else you're really going to take a huge hit to your return. I mean, somewhere in the neighborhood of 3 to 4% if you don't do it right will be reduced in how much you receive annually. So the first thing you need to do is open up the IRS Schedule E. I know it sounds daunting, but what you want to do is that's the form where you're going to fill out all your real estate tax information. So you need to know what goes on that form and be familiar with it. The most important part of this is that's where you're going to deduct all your expenses. So my first tip is to make sure that you track everything that's related to your property. The ones that people usually miss are travel. So whenever you're driving, to go pick up something from the hardware store, you definitely need to track that mileage. Other things you need to do if you're driving to the property, you need to track that mileage from wherever you're going from. So when you're on those investment related things, you need to be tracking the mileage. That's huge. It doesn't sound like it's a lot, but you're going to be driving back and forth a lot. If you show the property, you're going to have to drive there. So there's a lot of things that can be skipped, and at about a little more than 50 cents a mile, it really adds up. The other thing to do is make sure that you have a notebook or an Excel spreadsheet where you're really tracking all the expenses in real time, because it's almost impossible to come back a month later and think of all the things that you spent. So don't make that mistake. So while we're discussing expenses, those are costs that you can deduct every year during that year. There's another concept called depreciation, which is where you have to basically take that cost over a number of years. And with real estate, that can be up to 27.5 years for residential property. So clearly you want to make sure that you can deduct it rather than have to capitalize those costs over a long period. Now, why it's difficult is because there's not a clear line. The way I like to think about it is it's a repair if you're simply repairing the property that already exists. You have to capitalize it if you're somehow improving the property. So let's take it a quick example. If you come and fix a furnace because it's not heating correctly, that would be a deduction in that year. Whereas if you replace the furnace, you'd have to capitalize it over the long period. So clearly that's one cost is going to be much greater than the other, and there's not like a dollar figure that you can just say, oh, okay, this is going to be capitalized because it's over this amount. It's very specific, and it can be a difficult thing to track. But one thing you should do is just make sure that you write those expenses, and then you can figure it out at the end of the year. If you don't write down the expenses, I promise that you'll forget it, and you'll lose a huge deduction as they add up over time. So the last piece of tax advice that I'll discuss is whether you should put something on a Schedule E or a Schedule C. Now, for almost everyone that just has a typical rental property, it's going to be easy. It's on a Schedule E, and all the rules are pretty clear there. Where it gets a little more complex is if you have Airbnb. And the reason it gets more complex is the IRS has said that if you average your rental to less than 7 days, then it should go on Schedule C. Now the trouble here is if it goes on Schedule C and you also provide other services, and think of these services like a daily towel service, you put a coffee maker in the room, you give daily breakfast, you do things that basically a hotel would do. You're not really in a rental business, now you're operating a real business, more like a hotel. And the reason that can be an issue is if you have any profits to that, then you're going to have to also pay self-employment tax. That's another 15% tax that you want to avoid. And an easy way to avoid that is by having more than 7 nights as your average rental. So the way you're going to calculate whether or not you have 7 days or less is a little bit complicated if you have another unit that you rent out annually. So what you're going to do is you're going to take the total number of guests that you have from your Airbnb plus your annual tenant. You'll add up all the days then that they have rented or stayed through your Airbnb. Now you're going to divide the number of people divided by the total number of days that it was rented. As long as that number is greater than 7, you're okay. If it's less than 7, then you're really going to have to take a look and make sure that the services that you're providing don't kind of come to that quality of a hotel. And that's because you want to avoid the self-employment tax. So just to restate it, what we've got here is if you're under 7 days, you have the potential for self-employment tax on the Schedule C. If you're over, then you're going to be on Schedule E, which is the typical real estate. And I think that's just the way to think about it. And we know that if you're under the Schedule C, you don't have to absolutely pay self-employment tax, but you're going to have to be careful to make sure you don't cross that line to provide services like a hotel would. If you're also providing activities, towel service, changing the sheets daily, anything like that, those are all factors that'll go to the fact that, hey, you're more like a hotel than just simply renting out a room. So be careful of that line. So the next point is going to have to do with a credit check. And I use My Smart Move. There's a number of other programs, but make sure that you get the credit check done on the tenants. The other thing to do is make sure that you get pay stubs, get a copy of the ID, and make sure you call the employer and call the previous landlord. It sounds like a lot of work, but there's so many people trying to do scams out there, you'll be amazed. And you'll catch a lot of people in lies trying to exaggerate their income or even who they are. In my own experience, I had someone who took a photograph of a fake ID, and they also stole the identity of another person. Well, I didn't catch the fact that it was a fake ID from the picture, so I would actually even recommend looking at the actual picture. I did all the other steps and it all checked out because the name was right. It just happened to be a stolen ID. I just didn't catch the fact because it was a stolen identification, so all the information they provided checked out except for the ID. So you really have to be careful that the person that you're seeing is the person who is in fact going to rent the apartment. It can be tricky, and there's a lot of people out there trying to scam the system, so just be careful. The third point is make sure you have a written lease. I can't tell you how many people actually think that just letting someone into their rental unit is perfectly fine with a handshake, and they say, well, I get a check every month, so everything's working out. A lease is so much more than just the monthly amount and how much and how long you're going to rent the apartment for. It has a lot of rules related to damage, what the tenant can do, when you can enter the apartment, and a lot of other rules. Your local realtors association no doubt has just a general form that you can use. It doesn't have to be a fancy contract that you pay an attorney thousands of dollars for. In fact, you don't have to pay anything for them. They're almost always online, specific to your state. Also make sure that you include lead paint disclosure and any other disclosures that are required in your locality. Just do an internet search of what's required there and you'll find it. But make sure you have a written lease, especially if there comes down to an eviction, because if you don't have that lease, when you go into court, they're going to come in and say, well, I always paid late and so was fine with it. Well, if you have the lease, you'll be able to point to it and say, no, Your Honor, they had to pay by this date and they didn't. That comes up a lot, and if you don't have a written lease, you'll just be stuck and it'll be very difficult to get a tenant out of the building. The fourth point is to make sure you follow up on late rent. So in your lease, it almost always has a due date of the first of the month. Then they also usually have 2 or 3 or 4 days, sometimes 5, to make sure and actually get the payment to you. Once you hit that 5th day, you should definitely be calling the tenant. It's never a fun call for either person, but make sure you call and you just get an understanding of where they are, where the money is. Sometimes they simply forget, other times they have run into difficulty, but you need to know where it is and when you're getting paid. Don't ever get stuck into the situation where you just say, okay, pay me more next month. That doesn't work. You're the landlord now, so you really need to make sure that if they don't pay you, there's an understanding of when you will be paid, and you can't put it off for a month. People need to be paid and paying their rent on time, and you can't get stuck in a situation where you're constantly receiving late rent. Now, if there's a huge circumstance, you can be forgiving, but just make sure that you understand once they're late once, it's going to happen again and again in almost every situation. Also, once they get behind on rent, you'll almost never see that money again. So the next part is, once you've just had that discussion with your tenant and they've missed whatever date that you've agreed on next, make sure you start the eviction process. People will come up with more excuses than you ever heard in your entire life. I personally had a tenant who within 2 months had a stroke, had a brain tumor, and had 2 surgeries. It happened after I handed him the eviction that he walked to the door and he looked perfectly fine. So people will give you a lot of sob stories, and sometimes they're true and you need to verify it and be forgiving and be a good person. But on the other hand, don't just flat out believe what they're saying. Start that eviction process. You don't always have to follow through with it, but you need to start it, because if you don't start it, everything's just going to get delayed and get worse. And your tenant, it's sad to say a lot of times, but they'll just take advantage of your kindness and they'll just push and push unless you actually draw a line kind of in the sand and say, this doesn't happen. Paying your rent's a serious thing and we can't fall behind on it. You likely have a mortgage on your property, so you have bills too. If you call the bank and give them a sad story, they're going to say, oh, I'm sorry, now you need to pay me. So you need to do the same. And the final point is insurance. So many people think they should go short on insurance, and this is one area that you really shouldn't. You also need to be very honest in whatever you say. People sometimes think, well, if I do a little shortcut, I won't have to pay as much. I can say the building is in better shape than it is, or I've never seen this issue. That never works, because if something bad happens related to what you misrepresented on that form, you can bet that the insurance company is not going to pay out. So 100% be honest on your policy about everything. And if there's any question about something, make sure you email your agent saying, I just want to be clear about this, and have it in writing. Because if you just have a phone call, then what they're going to say is, oh, I never said that, or you misunderstood what I said. So don't fall into that trap. And if you do have a phone call discussing with the agent, send a follow-up email that says, thank you for your time in discussing my insurance issues. Here's what I understood. Please correct me if I'm wrong. You just want to have that documented, because if anything bad happens to that property, the insurance companies look for a lot of loopholes to get out of it. The next part is what kind of insurance to have. Now, if you're living in the unit, you possibly can get a different insurance policy than if you're not. People who have up to a 4 flat, and depending on the insurance company, can sometimes just have a typical homeowner's policy, specific to the insurance company. Otherwise, you're going to have what's called basically a landlord policy on your property. These are a little bit more expensive because you're not living on the property. But just again, make sure that you follow up with the agent, tell them what your situation is, tell them what you're doing, and then they will give you the proper document and insurance policy, but have it in writing. The final piece is to make sure you have liability insurance. This usually comes along with the landlord insurance as an extra, or your homeowner's insurance. You can skimp here, you could go lower, but definitely don't. I would recommend at least $1 million. You'd be surprised at how much a hospital bill can add up, and you don't want it to wipe you out. So make sure you have $1 million policy in place, and that should cover almost all accidents. One broken arm can cost tens of thousands of dollars. A more serious injury can easily go into hundreds of thousands. So don't let that happen to you and lose your property because you are underinsured. You can also get what's called an umbrella policy. So that's even sometimes better. They require a minimum amount on your property, but then no matter where something else happens, the umbrella policy covers you. So this is nice because if you get in an auto accident, the umbrella policy will also cover that if your auto insurance doesn't cover enough. If your landlord policy doesn't cover enough, then the umbrella policy will cover it. Just make sure that the umbrella policy covers all the policies, and you tell the insurance agent, here are all the policies I have, here's what I want to be covered. So that's all I have for today. If you have any questions or comments, please enter them below. Next week, we're going to discuss IRAs, and I'll discuss all the ins and outs of IRAs, when you should put the money in, and what you should invest in after that.